Hello and welcome to Market Guru. Joining us today, Porinju Veliyath, Managing Director and Portfolio Manager at Equity Intelligence India. Porinju, thanks so much for taking the time out today to talk to us. I actually want to start off by getting a comment from you as far as the market is concerned, because remember the last couple of days there's been a lot of volatility, and I know you like to talk more from an individual stock point of view. You like to look at the mid-cap space, but just broadly in terms of what's happening out here, there's been a lot of debate as to how the markets are positioned right now regarding valuations. The reform momentum has somewhat died down, barring the last 2 days or so. But what's your overall reading in terms of the market environment, market sentiment right now?
Market sentiment right now is not very good, Priyank. But at the same time, I am very, very optimistic and bullish on Indian markets going forward. Okay, from a stock picking point of view, even the last 1 year was excellent. And the many investors will vouch for that. But people who are generally following the Nifty and Sensex, they didn't have a good time, which is true. Now, looking forward, I think India, the investing community, the Indian economy is going to witness tremendous, much more than expected kind of economic reforms going forward. There are already many government, reforms have been announced. Many of them are under implementation. Many are going to come. Winter session is about to start. I'm telling you, there are a lot of excitement going to happen in our Indian markets and investment environment. I'm very confident about that. Despite the very various minute or small negatives discussed by the Western interest and some part of the media, India is progressing, and we have to give time to the government, because it's a last many decades kind of things are getting rectified. The corruption, which was the last 10 years, we have been witnessing very, very high, intolerable kind of corruption promoted by the government and the politicians and the bureaucrats. So that has to be turning around. So I think government is doing the right thing, starting from the top level. Corruption is coming down. They're trying to make the doing business ease in India. A lot of things are happening. Many forms now. This banking, power-related, and discom sector. The kind of announcement called Uday. People are underestimating these things. I'm telling you, these were very essential things India needed to do. Now, people who want to criticize, they're talking the exports have been coming down. See, exports going down is natural process. Because of the global slowdown. And it's a global economic environment. So we can't blame the government for the exports going down. Some, narrow-minded people are doing it. So we have to look at the big picture, and I'm telling you, there is no reason to be bearish. In fact, the bears are running out of stories.
Porinju, always optimistic there when it comes to markets. I actually have a follow-up to that, Porinju. You mentioned that the market probably, there are a couple of the factors that the market's misreading somewhere out here. You aren't understanding the strength on a couple of these reforms. The other part that, again, the last couple of days where hopes have again got active post the finance minister commentary is regarding the winter session and probably GST as well. What are your thoughts? Do you believe the winter session, which again will probably be in a couple of days from now, will be a crucial one to watch out for from a market standpoint?
I think this winter session, the Congress cannot play a spoil sport. There are many senior leaders are exposed, the way they are making statements in Pakistan kind of things. So they are very weak. They are getting weaker day by day. So this winter session, they will not be allowed to be interrupting the session much. And I expect many important reforms will go through. And that's going to make the sentiment turn around in the stock markets. There is no doubt about that.
What do you make of this pharma sector? Because this US FTA overhang has been quite a bit for a couple of these large cap pharma names. And they've just recently been underperformers as well. Any thoughts on if you've been tracking DRL or, for that matter, the pharma pack?
Priyank, these, the fancied high-profile stocks like Sun Pharma or Dr. Reddy's, they have been chased by all the investors, and they have gone into some kind of territory with an overvaluation. That is simply the reason for if there is any crack happening in these stocks. Nothing else, because they were overpriced. Now they are correcting it to normal kind of levels. But whatever said and done, I'm not talking bearish on pharma sector in India. India has a real competitive advantage in pharmaceutical manufacturing and, the crime, all those kind of opportunities globally. And pharma is one industry. It cannot, go down. It will continue to grow. The emerging or the kind of global, symptoms of slow growth won't affect pharmaceutical industry in India. There is no doubt. But don't compromise on valuations. Just because a company is very good, and it is excellent management, great balance sheet, high profit margins. No, so when a company does very well, one should give the lowest price earning multiples. Whereas Indians have going the other way around. Now the growth is at best, they give the highest price earning multiples, which is fundamentally wrong. I remember I used to talk about a stock, Kitex. Why I'm talking again about Kitex? I remember I had a very large holding, nearly 5% of Kitex. I bought it at 3, 4, 5 rupees levels. And it was at 2p. I remember the growth rate envisaged, the potential growth rate was much higher for Kitex when it was quoting at 3p. And when looking forward, when we see the slowest kind of growth potential from that kind of a high base, it was given the highest PE of 40, 50 kind of price earning multiples. So don't compromise on valuations just because of the quality of the company or the quality of management, because of moat, fancy, or whatever kind of terminology is used in the market. Valuation is ultimately the king.
It's interesting you touched upon Kitex as well. The last couple of days we've been seeing some interesting reforms coming in when we talk about the export sector. So one, your comment as far as the reforms for the export sector are concerned, Porinju, and also apart from that, what's your outlook on the export sector overall? Because looking at the way the recent data is panning out, it's been a little bit of a tough environment.
Yeah, this is this is a natural thing flow in the global trade. Priyank. You cannot see now BJP is not efficient, so exports are coming down. I heard some senior congressmen talking like that, either lack of knowledge or their vested interest. So this is basically see there is a demand slowdown Europe and US and globally. So India we will also be affected from the export. And Modi taking over, the new government came in, they cannot turn around everything in 1 year. It takes time. If you took 20, 30 years to destroy it, it may take another 5, 10 years to build it up. I mean, destroy in the sense, destroying the potential wealth creation. What I'm telling you, why we are at $2 trillion today or below $2 trillion economy today. That's because the earlier politicians did not take advantage of our strength to convert it into a much higher economy. An economy by size. We failed to do it. If we go on pleasing the poor people by throwing biscuits, without, it is lacking the long-term vision. The politicians should manage India in a very different way with a long-term vision, like China did it a few decades ago. Now they are sitting on a $10 trillion economy. So we have to grow. We have no choice. India has to grow much, much higher, not at 6, 7%. We have to grow at 8 and 10%. Maybe at 12% some point of time. It is possible without being interrupted. And we have the potential, we have all the ingredients in place. Fundamental economics of the economy is definitely supporting that. What we need is some political will and a patriotic attitude by all politicians. That can lead India into a much higher growth trajectory. So look at the big picture. Shall I tell you one thing, Priyank? I'm telling you, I'm the most bullish factor today for Indian economy and stock investors in India. Is something happening in this country. There's a big game changer. There is a cooperative and competitive federalism happening. First time since independence. See, each states in India, we have 29 states and some 7 union territories. Each of them are very different. The language and the culture, their economy, it's very, very diverse kind of a country we are into. So I think recently the new government has, they have scrapped that earlier planning commission and Niti Aayog is in place. I'm telling you, this is with a long-term vision and to promote friendly competition among the states when it comes to economic growth. That is why perhaps, I don't know how many of you have noticed it. You can see the kind of ads, even your own channel is benefiting by ads by the state governments. Resurgent Rajasthan, the vibrant Gujarat, progressive Punjab, sunrise Andhra Pradesh, emerging Himachal, invest Madhya Pradesh, invest Odisha, Daman and Diu. See, I'm telling you, everybody is getting into the bandwagon. And this can be a game changer for Indian economy. And, some vested interest, opposition, they are trying to downplay it. And the only vision now, it is so surprising, the Congress leaders getting Pakistan's help to topple their government. That's the kind of statements happening. I'm reading in the newspaper. I don't know how far it is true. So, every politician should work towards India's progress. If somebody is obstructing it and disruption is done, understand he's not a patriot, he's anti-national. Today, India is at such an inflection point. We need support from all political parties. Think alike. The aim should be our higher economic growth and progress.
Fair. So that's as far as the broader outlook on the macro front is concerned. But Porinju, let's get specifics now. Let's talk about sectors and stocks that you've been looking at. One of the recent bit that you'd actually tweeted about recently has been the agro space. Now, this is something that you always track pretty closely, but recently we've seen a huge spurt when it came to the sugar pack. Is it only limited to the sugar sector, or you believe there is a larger story that's unwinding out here when we talk about the agro space in the country?
Yeah, I think it's a very valid question, Priyank. In the last many years, the rural economy, the agri-economy, and the agri-commodities, the manufacturers, farmers, everybody has been suffering because of lack of long-term vision of the planning, by the government or whatever, our system. So I think the worst is over for these sectors. The worst is over, especially sugar. If the manufacturers make loss, the farmers lose, then they make suicides. So it's a very bad scene. It cannot go on like that. Maybe the buyer of sugar has to pay. They have to pay much more than today. So I feel there is, globally also, there is a shortage of sugar going to happen. In India also, I think the monsoon was bad in some part, and it was very good in some other parts. So I find, some companies in UP, and some of them maybe very few in Tamil Nadu, they can take advantage of that emerging better environment in the industry. That's why first time after a decade and a half, first time I bought some stocks in sugar, personally, not in portfolio management. PMS, we have a stock called DCM Shriram Consolidated. Now the new name is DCM Shriram Limited. They also have got a very large division of sugar. It's a very big company, around 6,000 crores plus revenue company, around 1,200, 1,300 crores kind of sugar. So, there are a lot of companies. I'm not asking anybody to buy this stock. We have a small holding recently in PMS. So, I think that's a sector which was totally ignored. Investors lost money in the last many years. But I think there is some kind of hope. Light at end of the tunnel is emerging. And this is a sector people should look at. Very selectively, but there are some companies which have gone very bad, because the balance sheet is gone bad, irrecoverable way. So one should be very careful. Don't buy a stock because it is cheap. Look at the balance sheet also.
DCM, Shriram, a couple of these stocks from that space are a few of them, but you've also got some of the rice producers on your radar as well. What's been the story there? Because, we've been interacting with a couple of them as well. And one of the recent trigger has been the Iran market somewhere opening up, though the official confirmation is somewhat still pending. But look at KR. I mean, as we speak, Porinju, I've got the one-year charts up of LT Foods, KRBL. They've all more or less doubled Kohinoor Foods also. Well, that one's been somewhat of a slow mover, but pull up KRBL and LT Foods once again. The charts have been phenomenal for these two names. KRBL is up 143% in the last 1 year. LT Foods up 135%. Porinju, is this a space that still has potential?
Priyank, they are not doubled. In fact, I had one of my largest holding in portfolio management a year ago was KRBL.
Okay.
And our acquiring price was between 20 to 25. We acquired few million shares in portfolio management. Now we sold recently completely out. The stock can be still good. I'm not telling it's all price and all, but I am sometimes, we have a habit, especially after getting it long-term capital gains. I'm dynamically managing portfolios. We try to take advantage of the medium-term movements in the market. So it's a 10-timer KRBL after I bought, and after I had tweeted at 20 rupees, I had tweeted the stock. So what I mean to say, and now we have been buying from 100 rupees, the other stock, LT Foods, Dawat. It's a great brand. Got, I think 30-35% market share in the US. It's an excellent company. So I think you're right. These kind of companies can still create wealth. But KRBL, I think more than 10 times in a short period. But be price sensitive. Don't buy anything just because somebody excitedly talked it on the television and all. So investors should be always price sensitive, always be cautious about the value, the margin of safety. There is nothing in this world you can buy at any price. You have to limit yourself.
Sure. And talking about that, the other interesting one has been Eros International, Porinju, in the last couple of days. There's been so much talked about it, and for the first time, the queues, or rather, it's rare for the domestic stock to move so much. When we talk about the way the queues of the parent company are coming from the US itself, today also, as we speak, it's up by almost 4% odd. But Porinju, Eros, what's happening here?
No, I'm not very closely monitoring this company. This is one important company in our portfolio 3 years ago, and we booked profit much earlier. We haven't bought it later in our portfolio management. This stock, I think, many uncertainties, but somebody talking about zero and all, I think it's nonsense. That's the kind of reports I saw about Eros International. But I think even if you see my old tweets, I had talked about the management issues on this company while recommending this stock at around 150 rupees. So it's nothing new. This kind of concern, there are some companies are famous, well known in the markets for their little unethical and unprofessional kind of accounting or attitude towards minority shareholders. So Indian investors have to live with all these kind of things. But again, valuation is the key.
All right, so that's as far as Eros is concerned. The other excitement in the market for in the last couple of days has been provided by a couple of the recent success of the IPOs. Now, you were somebody who was tracking CCD pretty closely as well. What's your thought on this, the way the IPOs are panning out right now? Anything that's got you excited? I mean, Indigo's been doing pretty well. So your thoughts on some of these recent listings, and if you've been taking a look at any of these stocks closely?
In fact, yesterday in a discussion I was disclosing, the only IPO I did it in my life, something like some 28 years ago. I bought 100 shares of GB Films.
Okay.
That was the first and last IPO I ever did in my life. Nobody may be knowing about this company, the new generation. This was an old Chennai-based company. So I have found one thing, See, IPO is a very, very boring kind of a segment. If you find a very good value, a good company at a reasonable price, you will hardly get the shares. It's not worth, applying for that. If it's a bad company, you get the shares and it underperforms. So in both way, it's not exciting to me. We have never taken part in IPOs because I always find, if on a comparative basis, the listed companies are much cheaper by valuation than the IPOs coming out. That is because this happened in the last 1 decade. Earlier, there used to be, even if you remember the Maruti IPO, we used to have some excellent IPOs at a reasonable price, and the market participants were not so many, so you used to get shares. So that was interesting. But today, I think in the last 1 decade, it's not I never liked the IPO segment for the same reason. If it's good, you won't get it. If it's bad, you will get it and you will lose money.
So fair enough. That's as far as the approach to the IPO market is concerned, Porinju. But what about the aviation pack?
CCD I found at around $1 billion valuation.
Okay.
Much inferior to Tata Global Beverages, which I have been suggesting this stock and we have been buying into the portfolio management for a long-term investment. So I had once tweeted CCD at $1 billion. My comment is buy Tata Global at $1.3 billion. That's what you might have seen, perhaps. Okay, so that's kind of things, In some cases, the fancy is created artificially, taking the help of media and some operators, and social media in the market is very active today, So even the social media can create havoc for the investors today. That can be manipulated also by many vested interests. So one should be very careful about the messages passed negatively, positively in the social media, most of which are exaggerated either way.
In terms of the aviation pack, specifically on that, Indigo's, it came via the IPO route, got listed. The last couple of days, it's been having a good run. But do you see potential in this sector? Because this probably is one of the more of a consensus topic right now, is what we seem to gather from talking to a couple of the market commentators out here. Are you as optimistic when it comes to the aviation pack?
It's not, sometimes back I was feeling when that Jet Airways and all came down very low. Again, I was, suggesting when the IPO of Indigo comes, this can go up. That perception can change for better. But I have to admit to Priyank, I am not competitive enough to talk on this as a sector. my knowledge doesn't go to that extent, where I can really analyze the future of these airlines companies and the business. And I don't think anybody can do it.
Okay. So that's as far as the aviation pack is concerned, is what we're seeing there. Now, Porinju, the other interesting bit out here, in terms of stocks right now, what's been your new theme to focus on? What are some of your top picks to look at, let's say from a medium-term point of view, which are a couple of the ideas that you'll be working with in the near future?
One stock coming to my mind, Priyank, the Hindustan Petroleum, HPCL. This was, again, my earlier peak in portfolio management at around 300 rupees. We exited completely near to 1,000 rupees some time back. Now, again, I like the stock at around, it has come to some 25,000 crores market cap. And this business, there is some reasonable visibility and clarity going forward. Now, there won't be any burden of the subsidy, which is very important. If you see the network of this company and the business model, now the crude price coming up and down may not make much difference to them because once subsidy is removed. So I feel at 25,000 crores market cap and manageable debt, HPCL looks, I think, is a safe bet for a reasonable compounding for the next many years.
Okay. And Porinju, some of the smaller names that you always like to focus on, I remember reading somewhere in recent tweets as well that you're looking at NIT, HSIs. So what have been some of the other smaller or the mid-cap picks that one can look at?
Priyank, these are not small names. They are big names. Maybe they are small stocks. HSIL, I love the stock. Okay. Around 1,800 crores market cap, the leader in this country in the sanitary ware. And their glass division, the container division is turning around. I think it's a very good stock for people to make decent return going forward, not any multi-baggers kind of thing. And there is no hurry to buy. I found some fund is selling every day. So what is the other stock, Priyank?
The NIT, I was looking at some tweets on NIT as well.
NIT has been, I think I have recommended on this channel, Bloomberg, at around 40 rupees NIT.
Okay. With
a lot of conviction some time back, if you remember. So NIT is today at around 90 rupees. I still like it. We are holding. We hold around 4% of the company in our portfolio management.
Can you share the rationale as to why you believe NIT could be a stock for investors?
Actually, NIT I bought at zero enterprise value a few months back.
Okay. And the rationale there, Porinju?
Yeah, zero enterprise value is a good rationale to buy the stock. NIT is holding the NIT technology. The market cap was equivalent to the holding in NIT technology a few months ago. Okay. And it's a great business. A decent, clean, healthy balance sheet, professional management, and a declining business. They have built it up to a futuristic business now. So next 10 years is going to be, for NIT, it's going to be a futuristic business. Especially their corporate learning solutions, the CLG, corporate learning group in USA and Europe. They are adding clients one by one among the Fortune 50 and Fortune 500 companies. This can be a big potentially. I have talked when it was $100 million valuation. I have talked. There is a space to dream that about $1 billion valuation. Now it's around $200 million valuation. I think that's a long way to go, but no need of rushing to buy these kind of stocks. I'm talking about next 5 years.
Sure.
So from 90 it can go to 80. So traders should not follow my ideas. It may be not good.
Porinju, as we speak, I'm actually getting a message from somebody who is listening to the conversation and probably tracking you on Twitter as well. You put a tweet out earlier this morning saying, you should make your own Nifty itself, try and make your own index. So the question here is, how many stocks would you actually try and put into that, and what kind of weightage would you probably go around, is what some of the viewers are actually asking.
I love a 10 stocks portfolio.
Okay.
And that's what my average number of stocks in our, we have around 650 clients. The number of stocks average will be 10 stocks, maybe 9, 10, 11 kind of stocks held in our. So you can say it's a concentrated portfolio. That's what I have been doing all my career, all the last 2 decades. And okay, now this Euro Nifty, what I am telling, see, following the Nifty is boring. Anybody can do it. It doesn't need any special skill or expertise or knowledge, wisdom. You don't need anything to follow Nifty and try to make money. See here, the last 1 year, Nifty is down by 7, maybe 6, 7%. I don't know exactly. My portfolio, my clients on an average is making around over 40% return the last 1 year. So that's because I'm not a Nifty fan. I'm not, fooling around Nifty. So I'm making our own Nifty. For me, only that's important.
Fair point.
Anybody can practice this. I think all investors, all serious investors who want to pursue value investing, who want to learn about it, should make Nifty. I'm just using that word, because you have to make your own portfolio. And the developments in those companies, the progress in those companies, how they are managed, how those companies are creating wealth for you, that's the only thing important to you. I'm telling you, I can probably say I have nothing to do with the stock markets in India.